What's going on, everyone? So you guys might be wondering why the market basically gave back all of its gains. So in today's video, we're going to talk about that. We're going to talk about the stock market, the crypto market, and the next moves in the market in general. So without further ado, let's get started with the video. So this morning I posted a watch list, and if you look at these levels every single day and you take trades against these levels, and essentially you buy at the money calls or puts as these price levels get broken, upon a 5 to 10% stop loss at a 2-week expiration, it's very, very unlikely that any of these trades won't work, right? So I got a lot of messages today. I think they posted them here. So a lot of people made a lot of money following these plays. So it's very, very simple. You just, follow me on Twitter, and then you'll see the levels to buy puts below. And as they cross below, I mean, it works out. You could look at Apple, Nvidia, and Tesla specifically. Those worked like a charm. So the market, right? Why did the market give back all of its gains? And that's another reason why I post put plays, because we need to have plays ready for longs and shorts. So the market broke, came back and retested this 466, and then bounced off of essentially the 20 exponential moving average. Why did this happen? So tomorrow is quad witching day. It's essentially the day that all of the options expire. So historically, whenever that happens, the market has a red week. And essentially, especially that day, leading into that day, it's always historically bearish. So I'm going to be honest, this is not a bullish setup. This is not good at all, actually. So honestly, my opinion at this point, it doesn't really matter. We just need to see if these levels hold. All right, so now we have to pragmatically look at the levels. 464, which is basically perfectly coincided with the 20 exponential moving average right here, needs to hold as support. If not, then obviously 461.23, where we tested multiple times, is going to be the next support level. If that breaks, then we can end up, falling much, much lower. And the issue with that is because, again, the MACD, it gapped up, right, while it was pointed downwards, and then the next day we fell down very, very heavily. So usually whenever that happens, it's the signal of a short-term dramatic move to the downside. So essentially, what I'm assuming is going to happen is tomorrow into OPEX, most likely we're going to fall again, and we might end up falling again on Monday. But I mean, this is just not a bullish situation at all. Usually when the MACD is falling and we gap up, right, and then we fall afterward, that is super, that's a very, very bearish signal. So we have to really see if that's, if these levels hold. I could be completely wrong. History can be completely wrong. But historically, when the MACD is pointed downwards and we gap up, terrible. That's very, very bad. Anyway, so we need to watch if 464 and 461 hold on the SPY. That's really it. The MACD is still overbought, which means that there's still tons of room to the downside. The RSI is also pointed downwards, which means that, the momentum is pointed to the downside, and we can see that through the price action as well. The NASDAQ gave back all of its gains. This is a huge reversal candle. Thank God we took some profit yesterday. So essentially, now we need to see if 384 is going to hold on the NASDAQ. You can clearly see it engulfed the 2 prior candles, and it came back and filled the entire gap that was made, essentially. And still, the MACD is barely oversold now. So you can see that this blue line right here finally crossed below, which means that thankfully, we're starting to get into oversold territory on the QQQ, which means as it continues falling, there's going to be lots of potential room to the upside. Okay, so but the fact that we had such a big reversal candle, yet we barely crossed below, that is extremely bearish, and that means from just the indicators that there is tons of more room to the downside. It's really, really bearish. So again, we need to see if 384 holds. If 384 doesn't hold, then I think that we're going to crack back down to essentially 377, 378, retest this trend line on the NASDAQ. And you could also see the RSIs moving downward as well. And yeah, I mean, just really just be careful. I didn't post any long ideas. I was very, very quiet on Twitter today. I'm just being patient to see how the market responds to tomorrow, as well as potentially Monday. That's when things will really get heated up, in my opinion. I'm going to... Oh, actually... Yeah, the holiday seasons. Damn. All right, so I guess we're going to have to see what happens tomorrow. All right, so there's that on the NASDAQ. Let's take a look at the IWM. So the IWM literally once more looks extremely bearish. It's so, like, it looks like it's going to make a flush down to 204, 205. That's exactly how this looks. But I'm not sure if the market makers are essentially going to allow that to happen. If they did, that would be a gut punch to retail, because they know exactly what they would be doing, essentially, because a lot of retail are in hope of a rally during the holiday season so that they can take out profits and, you know, invest back into the economy by, you know, buying goods and et cetera, et cetera. So it's generally a time when the stock market does somewhat decently. But if this continues falling down like this and the entire market really falls down into today or into tomorrow and early next week, that would be really devastating, because that would cause a huge dramatic drop. Retail would lose a lot of money. And then because they lost so much money on the way down here, right? And this chop, if you weren't properly playing this chop here, you would have lost a lot of money. And that's their entire game. They want to take money from retail. So it would be devastating if they brought it all the way down here and then began to just rally. So that might be the case, in my opinion. Because technically the IWM, the indices in general, they look very, very weak. So we need to see if this level holds. Obviously, so now pragmatically, what just happened is we came back and retested these prior lows and we held them. Okay, so bare minimum, that's exactly what happened on the IWM. You can see that the MACD flirting with crossing down below, which is not good. It means that there's still tons more room to the downside. This is textbook. Literally like a flush to the downside indicator. The way that the pattern looks, etc. So in crypto, if you have this MACD indicator on any crypto signal, essentially, right? Because a lot of the algos are written in the same way. Usually when the MACD looks like this, they always fall. So that's why trading crypto, etc. is like really simple, because a lot of it is just done by the same types of people that are looking at the same things. So, I mean, yeah, we honestly just have to be careful and look to see, you know, how the market responds tomorrow. The IWM needs to hold these prior lows at around 211, and the fact that we held above 213 is also pretty bullish. The NASDAQ needs to hold above 384. The SPY needs to hold above 464 and then 461. But I mean, guys, like, this is the indicators just look garbage, and we gapped up and fell down. So usually, again, when that happens on the SPY, that is the signal of that is very, very bearish. So yeah, just really be careful about putting too much money into the market. Just, if you do want to make any plays, make pretty safe plays. Use these levels. I post them every morning on Twitter for free, obviously. So, I mean, you can just go back, look at these levels, put this on a chart and say, okay, if I bought puts as Apple was crossing down below 179.18, what would have happened? Okay, cool, blah, blah, blah. I mean, like, it's self-explanatory. If you buy puts as it crosses down below this today specifically, like, you would not have lost any money at all. It would have been impossible to have lost any money with these. So yeah, I mean, that's why I post those levels. Just be patient. And there's that for the IWM. Now we should definitely take a look at crypto markets. All right, so Bitcoin. Clearly we're, you know, touching resistance. Essentially, we bounced off of it, and we're failing to cross above this resistance. Again, 51, 52, 53,000 are extremely important levels to close above. But the first level that we would need to close above is this blue downtrend line here. And then obviously the next target would be the 20 exponential moving average. But now what's interesting about Bitcoin is that the MACD is moving upwards, yet Bitcoin's price is moving downwards. So what we have to understand with Bitcoin in terms of the technical indicators is, as long as Bitcoin remains above specific levels, the indicators are much easier to basically manipulate and take advantage of. So right now, Bitcoin is trading above 47.5, right? It held this level very nicely. But the MACD is becoming overbought. So unless we, so basically what would be the maximum pain to retail traders would be a false breakout above this level, a retest, and then a drop. But yeah, again, I'm not sure how they want to go about doing this. But again, honestly, regardless of my predictions of what might happen with price, I still think that we're going to come back and retest 45 and 44,000 on Bitcoin. I don't think that we do bounce out of this, only because the indicators look really weird and lopsided, and it would just be too easy. Now that banks and hedge funds are involved in the crypto space, all of retail is expecting a huge rally in January and, into December, January, like there was the past 2 times that Bitcoin rallied, right? Banks and hedge funds are aware of this, and they are aware that retail is aware of this. So again, a bank and a hedge fund, their main goal is to take as much money out of the retail traders' pockets, so that all of the influence that retail traders do have on the markets get nullified. And basically the banks and the hedge funds take all of that money, and then basically all of the influence and price action, etc., is purely dependent on what they do. So just really be careful about that, because the last 2 cycles essentially that have happened with Bitcoin, a lot of it has just been blatantly by a few groups of like rich groups of friends. Essentially, that's really what it was, like networks of rich people. Now there's like pensions and mutual funds, etc. Banks are allocating percentages of their portfolio to Bitcoin, so it's completely different. The landscape of the investment market on Bitcoin is completely different as well. So that's why I think that we do fall. But again, look, we're still at resistance. We would have to close above resistance, and then we might skyrocket above a bit and then come back, retest it. So yeah, essentially we just need to see if we can close above 50. If we close above 52,000, then it's a very high chance that we continue on higher and then come back and retest here. But what I think is going to end up happening is this would be devastating. But if we do rally back up to 55, obviously I'm not bearish Bitcoin crypto at all. I'm going to always buy every single dip. I don't care about, being wrong about this, but I'm thinking about in terms of the most pain to retail traders is if they bring it up, they make everyone bullish again, and then just completely destroy the market and bring it down and make January bearish. If January would be bearish, a vast majority of many people in the crypto market would lose a lot of money. A lot of options on Bitcoin and crypto in general, a lot of people are bullish through those dates. So I think, if I was a market maker, I was very evil, I wanted, just to destroy people's accounts, that's exactly what I would do. I would come back and retest this trend line here, which was a downtrend, right? That we broke, came back, retested multiple times. So this was a very, very important trend. And we came back, retested it over here, failed over here, and then now we're here. So I think that would be the most disgusting scenario if we came back and retested this and then fell. and then fell to like 41, 42. That would be devastating. I'm not even sure if many people would still have money because a lot of the futures traders, etc., they over leverage. So a lot of people would lose a lot of money. That would most likely be the most devastating case to retail. And then once a lot of people lose all of their money, the banks and hedge funds can come up and scoop it all up, and then they can send it. And then if that were to happen, then there would be new all-time highs into the summer, not into Q1. So yeah, I mean, we just have to. I kind of ranted, but it's really fun and interesting to see what is going to happen with this market, because now if you look, so essentially there's multiple different parties involved in terms of billionaires that are friends with each other that can try to manipulate markets and move the markets together. So they are aware of other players in the space. So imagine I have a group of friends. All of us have like collectively like 50 billion, right? And we know that if we were to start algorithmically throwing buy signals in small lots of, $1,000 each, but we did it at such a frequency that would signal many algos to alert, more buy signals, and it would essentially manipulate the market in that way. It would alert, signals to the upside, blah, blah, blah. Multiple different algos would catch up on the volume and then, send it. So essentially that is the game that a lot of these guys are playing. It's much harder to play that game on the indices market, because the indices market is multi-trillions, but the crypto market is not there yet. So all it takes is a few billionaires to put their money together and try to F over other groups of billionaires. So it's really, really fun to also see the power dynamic of what they're doing on Twitter. You look at Michael Saylor, you look at CZ, you look at these other guys in terms of their influence on crypto. It's just fascinating to see. It's like war, but in the open on social media. It's financial war essentially, but there's no physical harm that's being done here. So yeah, I mean, this is really, really interesting stuff. We need to see if these levels hold essentially, and then we need to see if we can cross up above this trend line. You can go ahead and make this trend line as well. From December 7th, you make a connection to December 12th. And yeah, there's my analysis on everything. There's my analysis on the crypto market. I hope you guys enjoy. Make sure to comment, like, subscribe, put on post notifications, and I will see you guys tomorrow. Thank you.